When it comes to growth ETFs, they tend to excel at turning your cash into, more cash. Hold on to your seatbelts, folks. This is going to be a good one. We are often talking about passive income or total return ETFs on this channel. However, it is time to give that spotlight to those growth ETFs and see just what they have to offer. The first thing we should do is define how a growth ETF differs from, a total return ETF, which is also often called a dividend growth ETF, hence a little bit of the confusion. A growth ETF primarily focuses on achieving capital appreciation by investing in companies expected to grow at an above average rate. Those companies are often reinvesting their earnings into expansion rather than paying out a whole bunch of dividends. So you will not see a lot of dividends on a growth ETF. They typically offer higher potential returns, but that does come with the cost of a little more volatility. In contrast, a total return ETF invests in companies that regularly increase their dividend payouts, providing both income and potential for capital appreciation. A total return ETF will tend to have dividends higher than growth ETFs, but typically much lower than, those passive income focused ETFs. These ETFs can offer more stability thanks to that regular income from their dividends to help buffer those market fluctuations. There can be overlap for sure. A growth ETF can absolutely fit into a total return portfolio if they are pushing up some great overall returns. In fact, a few of these ETFs we are looking at today could fit into a total return list for sure. Join today's conversation. Let me know in the comments if you have any purely growth stocks or ETFs. Thank you for your participation. If you love this sort of content, be sure to subscribe for more. And another huge thank you for that click. For this list today, I was looking for ETFs that derived most of their value from growth with minimal dividends, as in less than a 1.5% yield. In fact, one of these ETFs doesn't even have a dividend at all. I needed to also see positive growth across the board, and I wanted to see a 10% bare minimum on their return on equity. I also wanted at least a 10% return for their year to date, and also on their 3-year return. I was impressed with the results, as these are ETFs that I don't often think of, and now I am thinking I may want to pay a little more attention to some of these results. So without any further ado, let's do this. Kicking off this list, we have the CIBC Global Growth ETF with a ticker of CGLO. This ETF aims for long-term capital growth by investing primarily in a diversified portfolio of equity securities from companies pretty much around the world. At the time of recording, their price comes in at $28.49. They got an NAV of $27.46. Their net assets under management come in at $91.14 million, and they've got a very average beta of 1.02, meaning they're exactly as volatile as the market average. Their return on equity, lovely looking, 34.61%. They also have a pretty good return on assets coming in at 12.82%. Let's talk a little bit about fees. The management fee on this one is 0.80%, and the management expense ratio, exact same, 0.80%. This one does have a dividend with a yield of 0.347%. It's an annual dividend, so you only get paid once a year, but it comes out at 9.9 cents per share. Switching to their returns, their 3-year return on investment, that comes in at 24.09%. Factor in the dividends, we get a total return of 25.04%. Looking at their year to date, that return on investment comes in at 11.73%. Total return after we add in the dividends of 12.11%. That's not too shabby to start off this list, that's for sure. This ETF does offer a good exposure to high growth companies, and in fact, their top 3 holdings include Novo Nordisk, Microsoft, and MasterCard. Coming in at number 4, we have the NBI Active US Equity ETF with a ticker of NUSA. This ETF aims for long-term capital growth by investing primarily in the US equity securities. Their current price comes in at $42.31. They've got an NAV of $45.32. Their net assets, that comes in at $43.28 million. Their beta, a little bit less volatile than the market average. That's coming in at 0.93. Their return return on equity, another nice looking 30.93%. Return on assets, once again, I'm loving these numbers, 11.56%. They have a management fee of 0.63%, and their MER also comes in at 0.63%. These guys also do have a dividend of 0.342%. It's a quarterly dividend of 3.5 cents per share. Looking at their return on the 3-year return on investment, that comes in at 54.42%. Year to date, that return on investment comes in at an even 15%. Add in the dividends, we get a total return of 15.36%. This is another great growth ETF, and there's not a shortage of strong growth-oriented stocks in the US for sure. Their top 3 holdings are Microsoft, Nvidia, and Alphabet. Taking our third spot, we have the TD Active Global Equity Growth ETF with a ticker of TGGR. This ETF looks to achieve long-term capital growth by investing in global equity securities. They prioritize companies with strong sustainable franchises and strong capital allocation policies. Their current price at the time of recording comes in at $26.45. They have an NAV of $26.53. Their net assets, they come in at $33.58 million, and their beta a little more volatile than the market average. It's coming in at 1.18. Return on equity, another great number, 39.11%. Return on assets, these are just getting better and better. 16.46%. Their management fee comes in at 0.65%. The management exchange ratio, that comes in at 0.72%. Those are not bad fees. They also do have a dividend, a yield of 0.484%. Quarterly dividend of 2.5 cents per share. Looking at their 3-year, that return on investment comes in at 32.91%. Factor in the dividends, we do get a total return of 40.77%. On their year-to-date, their return on investment comes in at 16.21%. Adding in the dividends, we get a total return of 16.56%. This is another solid growth ETF, and I do have high expectations on its continued performance. Their top 3 holdings are Apple, Microsoft, and Google or Alphabet. It really should come as no surprise that the ETFs we've been looking at so far today, they have some of the same top holdings. I think that's going to be a given. In our almost top spot at number 2, we have the Guardian i3 Global Quality Growth ETF hedged with a ticker of GIQC. This ETF is focused on investing in high-quality defensive global equities with sustainable earnings growth. Their current price comes in at $28.25, so they have an NAV of $28.13. Their net assets come in at $26.23 million. So far, they're the most volatile on the list today with a beta of 1.44. Return on equity, holy banana bread, 55.58%. You can't beat that. Their return on equity, it gets a holy banana bread as well, 36.34%. Those are fantastic. Their management fee, that comes in at 0.65%. With some of these numbers, I'm okay with that management expense ratio being a little higher at 0.82%. They have a yield of 0.181%. It is a quarterly dividend of 1.1 cent per share. On the 3-year, their return on investment coming in a little bit low on this list today, 14.51%. Total return after you factor in the dividend, 15.05%. Year to date, that return on investment comes in at 23.15%. Total return, 23.26%. This is a very well-managed ETF, and definitely one to look at for that growth-focused investor. Their top 3 holdings, no surprise here, Microsoft, Nvidia, and Amazon. In our top spot at number 1, we have the CI Munro Global Growth Equity Fund with a ticker of CMGG. This ETF is globally focused with a priority for growth-oriented companies. At the time of recording, their price came in at $29.62. They have a NAV of $29.64. Their net assets come in at $37.77 million. Their beta, once again, a little more volatile than the market average, 1.19. That return on equity, 21.14%, and a return on assets of 7.88%. Their management fee is the highest on the list today, 0.90%, with a management expense ratio of 1.15%. This is the one I alluded to at the beginning of the video that has no dividend. Their 3-year return on investment, not bad, 45.62%. And looking at this year, year to date, that return on investment's coming in at 37.64%. That's not too shabby. shabby. This ETF has absolutely been doing it right, and it is not hard to predict that their top 3 holdings are going to be Nvidia, Microsoft, and Amazon. And just because it is Canadian, the 4th is Constellation Software. These are some pretty good ETFs for sure. They are structured for longer term investments, so these are nice ones to add to your core circle the wagon stocks, as these can potentially be ones to set and forget and then just let time grow them for you. If you are interested in any of these ETFs we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on VDY. Thank you for watching, and I will see you in the next video.